I'm Crystal Faulkner with the CPA and Business Advisory firm of Cooney, Faulkner and Stevens. We're here today with Bob Coy. Bob's the president of CincyTech, a Cincinnati-based venture development organization that makes seed-stage investments in high-tech, high-growth potential startup companies. Bob, bring us up to date with what's going on at CincyTech. I know you've been investing now in companies for about 5 years. What kind of results are you seeing?
Well, I think the results are really impressive and growing. Since we started in 2007, we've looked at over 3,000 business plans. We've helped close to 200 companies. We've done due diligence into those companies to see if they're can qualify for an investment from our fund. We've invested $11 million in 35 companies. Those companies have attracted an additional $125 million of private capital.
And let's talk about that for a moment, because that's kind of interesting that Third Frontier money is being used to help fund CincyTech. So for every dollar of Third Frontier taxpayer money, how much private investment would you say that we get for that?
At least $10.
Which is a great return. 10 to 1 is a really wonderful way to leverage taxpayer dollars.
It's great leverage, yes it is.
And you mentioned 200 to 300 new jobs over the last 5 years, even through the recession?
Yes, actually the 34 companies now employ over 300 people, and that's up from 120 people a year ago. So their rate of growth is continuing to accelerate.
Well, let's talk about some of the things that you're the most excited about. What are some of the big prospect companies that you see coming down the road?
Well, there would be three that I would point to. One is AssureRx, which is a company that's in our portfolio. It's a personalized medicine company. It attracted an investment from the world-famous Sequoia Venture Fund in Silicon Valley last year. A year ago, it employed 10 people. It employs 60 people today, and it's growing very rapidly. Another would be ThinkFine, which is a consumer digital company, and it today employs 40 people.
And isn't that the one that Fifth Third just made an investment in
as
well?
Right. That's right. Fifth Third just made an investment in ThinkFine. And then a third is a company called Nano Detection Technology, which moved here from Nashville last year as a condition for our investment. And it is a diagnostic company that can detect MRSA and other types of bacteria and diseases in doctors' offices and other places.
Well, Bob, you mentioned earlier that the Third Frontier money is leveraging 10 to 1 with private investors. When we continue our conversation on WCPO.com, I want to talk about who some of those investors are.
Okay.
We will continue our conversation with Bob Coy on WCPO.com. So let's talk about that. Who are these people that are contributing and investing in the companies that CincyTech is also investing in?
Okay. Well, when we invest the first time in a company, that's called the seed stage. And we always form an investor syndicate at the seed stage. We invest and others invest with us. Our most important co-investors at that stage are high net worth individuals. And there have been over 100 high net worth individuals who are unaffiliated with an organized angel group who've invested close to $20 million with us. And then other groups would include like the Queen City Angels, the Ohio Tech Angels in Columbus, the North Coast Angels in Cleveland.
So it's a very sophisticated process in terms of gathering outside dollars to partner along with CincyTech.
Yes, it is. We do due diligence, and then once we feel like this is a company that we can invest in, we go out and we identify other investors who have grown to have confidence in the due diligence that we do, and it gives them the confidence then to invest along with us.
So I mentioned CincyTech has been operating for now about 5 years, right through the recession. What do you see in terms of the overall climate here in our community for entrepreneurship and startups?
Well, I think the climate is getting even better over the last 5 years. The amount of seed capital that's available probably has never been greater, and the deal flow that we're seeing is getting better and better. And by deal flow, I mean the quality of the entrepreneurs who are coming to us to form a company, as well as the ideas that they have are getting better. And I do believe that one reason that's the case, the economy's, two reasons. The economy's getting better, but also as entrepreneurs learn that it is possible to work with an organization that can aggregate up to $2 million for a company at the seed stage, and this is equity capital at the seed stage, it gives them the confidence to leave a larger organization and put a lot at risk because they feel like they're going to have the money to be able to meet the milestones that they need to grow their company.
Sure, it's just all about the resources, and we do. I mean, as a community here, we have just a tremendous amount of resources to help these startups grow and succeed. And a couple of those resources are the University of Cincinnati and Children's Hospital. I know collectively they've invested about $400 million in research. Let's talk about their partnership with CincyTech.
Very good. Yeah, we have excellent partnerships with both UC and Children's. 5 companies in our portfolio are based upon technology that was developed at Cincinnati Children's Hospital. And we have a very nice pipeline of opportunities coming out of the University of Cincinnati. Especially in the life sciences, we invest in IT companies and in life science companies. In the life science area, UC and Children's are our most important sources of deal flow.
And speaking of UC, Children's, and other investors, as I mentioned earlier, Fifth Third made its initial investment in ThinkFine. Fifth Third started an organization, or a fund, I guess, to invest in startups. Do you see other commercial banks following their lead on that?
I hope so. As a result of the financial reform at the federal level, there's something called the Volcker Rule, which prohibits banks from investing in venture funds. And I think what Fifth Third has done is they have found a way to invest in startup companies through another mechanism. And I hope that other banks in the community will do the same.
Well, let's talk about some of the challenges, Bob, that you see here in our community for investing in startups. If you could have a wand and wave it, what would you change to even make companies be able to grow bigger, faster?
Well, I think the most important need that we have in our region is for what we would call A-round or early stage capital. We're a seed stage investor. We will generally invest up to $2 million over a 2-year period of time in a company. At that point, the next investor is usually an institutional venture fund who invests early stage or A-round capital. That capital is almost non-existent in our region right now, with the exception of one fund called Alos. And so it's been very difficult to raise the follow-on round, and what it's meant is that our seed stage investors have actually had to carry companies through the A round. So for example, AssureRx, which is a company I mentioned earlier, the investor syndicate in AssureRx ended up investing $6 million in that company before Sequoia came in. Sequoia is the Silicon Valley fund, and Claremont Creek came in to lead the growth round. So what we have found is that in order to protect our investors and to make sure that our companies have the capital that they need to grow, we have to be able to carry those companies actually into the A round, from the seed to the A round. And once we get it into the A round, then it doesn't matter so much where the venture capital is located.
Where do we get more A round funds?
Well, you mean for our region?
For the region, absolutely.
Well, we would need venture capitalists, and we have them, to be able to go out and raise capital from local investors as well as national investors. But the problem is that across the country, the venture capital industry has moved to the later stages. Mm-hmm. And one reason why the Ohio Third Frontier was put into place is because there was very little seed stage capital in our state to get companies started. And so they either didn't get started or they had to leave the region to get the capital that they needed. So it used to be that the seed stage was the gap in the capital markets, but now that's moved into the early stage. And that's just a national trend because it's obviously the more developed a company is, the less risky it is. And so that's, and people are afraid of risk right now.
Sure. And hopefully, though, Bob, under your leadership, your guidance, we will be able to fill that plug in terms of the A round too.
Yes.
Thanks for that great information and all that you're doing for our community. Bob Coy, President of CincyTech.